We're officially live on YouTube for the Thursday edition of the Not Your Average Investor Show, the JWB. Week. I'm your host, Pablo Gonzalez. With me, as always, the man that I affectionately like to call GC because of his genius concepts, because he knows how to generate cash flow, because he's a great co-host, and because his name is Gregg Cohen. Say hello, Gregg.
Hello, everybody. Great to be with you.
And with us, as always, our amazing community manager. We call her MTM because she brings us the moments that matter. And because her name is Madison the Magnificent. Say hello, Madison.
Hi, everybody.
And we want to welcome you if you're tuning in live on YouTube, if you're listening to us on the podcast at some point here in the future, or watching later on YouTube. Just really good call. Good call listening in. You just dialed into something awesome. But the way to take it to the next level of awesomeness is you go to NYAIS.com. And, you know, we do this live on Tuesdays and Thursdays at 12:30. And when we do it live, we got a community in the house. And that means we welcome them with a little tradition.
The roll call, baby.
Let's go. We got Lee, the MVP Bishop, saying hello, everybody. We got the Ringmaster,
Andrew Barnhill,
saying hey, everybody. We got Tony D in the house.
Tony D.
Anthony Dida checking in from South Florida. We got Nadeem Shah with his trademark good morning, good afternoon from the West Coast. Nadeem, we'll see you in a couple of weeks, man. 1 week.
1 week.
It's like 1 week, man.
Wow.
We got the touchdown maker.
Shannon Baker.
Shannon Baker's in the house. We got the second family from Marietta, California.
Gary and Rosalind Riley.
Gary and Rosalind Riley, the regulars. Welcome to have you back. Love having you back. We got the mountain man.
Bill Green.
Hello from snowy mountains of Colorado. I got an email saying the mountain man just closed on.
How about that? That was really cool, Bill. It was great to have you officially as a client now.
The headline reads, Mountain Man's portfolio grows larger than his mystique.
I don't even know if that's possible.
That's possible. We got Deborah Shorts in the house. Deborah, welcome back, saying hello, everyone. We got David Blattner is back from Massachusetts. Unseasonably warm there, 60 degrees.
Interesting. All right, 60 degrees. You'll take that for sure.
Take that for sure. Who else we got out here? Billy, whoa, a guy that hasn't checked in a minute saying Feliz Jueves, amigos.
I know what that means.
What does that mean?
Happy Thursday, friends.
It does. Bill Shields, man. We miss you when you're not here on time. Who else is checking? Con Novad. I hope I said that correctly. New name.
All right. New name. Welcome to the party.
Welcome to the party, Con.
Good. I like that.
Yeah, welcome aboard. We give people nicknames here. You just got one. Day one, Con. That's a huge thing. We want you to stick around. We got Marilyn Cotterman.
It's from Homosassa, Florida. That is the home of the
manatees. That is where people swim with manatees. It's a magical experience. There's real mermaids over there.
Big Mermaid fans. And manatee fans.
We got the first family in the house, the patriarch and matriarch, Ken and Carolyn Moline.
We salute you.
We got Marie Rockoff is back from Arizona, checking in from Scottsdale. Marie, how was the Super Bowl? Was it a good time?
Ooh, I bet it was awesome.
Did you party? All right. Who else we got? We got Elizabeth Malemo.
All right.
Yeah, Malemo. I was just checking the thing if there's Malerna or Malemo.
It's how he shows love is to butcher your name. So there you go.
Hello from Toronto. Elizabeth's a new name, right?
New name. Welcome to the party.
Welcome, Elizabeth. I love Toronto. It's the city that I've spent the least amount of time in my life that I love the most. I was there for 3 days for a conference and it was the best. It's like a super clean, super friendly New York.
Love that.
It's amazing.
Yeah, check it out.
Who else we got in the house? Oh, Con's checking in from New Jersey, the great state of New Jersey. We got a whole clan out in New Jersey, man. We gotta go to Jersey. Who else we got? We got John Moran from Delray Beach. John doesn't check in all the time.
This is a special day.
It's a special day.
John, way to be here, John.
Good to have you. We got my ride-along partner, Raj Bantu.
All right.
Checking in. Hello, all. Good to have you. We got Lisa Bocorquez.
Way to go on the pronunciation.
Yeah.
Lisa, it's great to see you. Thank you for being here.
Good to have you back from SF Bay. John Henning, the leadoff batter, running a little late today. John, you missed the welcome.
Yeah, we were just talking to your fam, John. We had Dennis and Michelle Yeager here. We were talking about the connection and, you know, how you brought them, I believe, into the mix here for the show and for JWB. So thank you for spreading the word and for being the leadoff hitter-ish today.
Yeah, John, just so you know, they told us, your nephew told us that you're gunning for Lee's MVP position.
Oh, that's right.
We welcome healthy competition here at the Not Your Average Investor Show. Lee, you're on notice, buddy.
Oh man, it's challenging the crown.
But we see Lee next week, so we'll see. All right, so now we got the roll call done. We get to do my favorite segment of the week, which is when Madison shares good news. What's the good news, Madison?
Hi, everybody. Same good news because I just love sharing it. As last week, the 50-50 raffle we have going on that supports us being able to gift a home to a veteran that has graduated from the K9 for Warriors organization. We, thanks to big majority, you guys have raised $1,800. Our goal is originally $2,500. I think we're going to have to put that one up a little higher. Need a little bit of a challenge for you guys. So we're so close. There's still, I have 10 days to raise some money. Share with your friends, family, enemies, frenemies, a stranger, whoever you want to share it with. Let's get this money so we can give this house to a veteran.
I love it.
Excited.
And the difference between how we have gone about this raffle versus other times that we've done the raffle is that this is all about our community, right? That $1,800, $1,900 with our boy Pablo as well here that we've raised. It's all you guys. We haven't included the team yet. We haven't reached out to clients yet that, of course, you know, in addition to the ones that are here, this is just you guys. And so I'm so thankful. I'm so proud of what we've been able to do. And I also want to ask you to do a little more so we can get to 2,500 really just from our community here. So if you haven't donated yet, we'd love for you to consider this 50-50 raffle is an opportunity to support JWB Cares in this home donation. Also an opportunity for you to walk away with a nice little check.
Walk away with a little check.
So 50% of the raffle, of course, will go to one lucky winner. When we draw that name, you have the opportunity to be that one lucky winner. But, you know, more importantly than that, it's about supporting this cause. And people wonder, you know, how do you build a home and give it away every single year? It's not from a sponsorship from a Fortune 500 company. It's from you. It's from $100 here, $50 there. It's from things like this that we do throughout the year. And so if you would be open to helping us support this mission, it would mean a lot to everybody here at JWB. You can purchase tickets. I think it's, is it $25 for?
It's $10 a ticket.
Okay.
It's $50 for 10 tickets, or it's $100 for 25 tickets.
There we go. There we go. Let's see if we can get to 2,500 just sort of in our little circle here. I appreciate all of you. Thank you.
I love it, man. I love the JWB Cares initiative. I love how y'all, every time somebody puts a house under contract, you ask if you want to donate to it. I love where the money goes. I just ran into our boy, Rory Diamond, who's no longer the executive director over there at K9 for Warriors.
That's right.
But like, just ran into him at Witt's Ice Cream last weekend. The idea that you are giving rescue dogs to warriors, to veterans of our community, to help them, you know, get on with their daily life, and then giving them a home. And just like, if you don't like puppies and veterans, get out of America. So I love the cause. I love it all. And Madison, that's good news. Thanks for sharing.
Of course.
All right. So as we continue,
we didn't give the way to go, the place to go if you want to donate. So let me just throw that out there. If you want to donate, go to jwbrealestate.com/raffle.
I just put it in the chat for anybody that
There
wants
we
to
go.
look there.
cool. It's in the chat. Check it out. If you're listening on the podcast, gamble with us next week. You might not be here for the tour, but you can still gamble with us.
There you are.
All right, GC. So as we go into this, we got some breaking news, GC. What's going on?
Well, always want to keep you guys up to speed, the things that are happening internally, other things that are affecting your JWB investments. And so there's no time like the present and no opportunity like right here, right now. So I'm going to bring you up to speed with some changes that are happening to the private lending program. And I'll tell you, our longtime private lenders have been asking me, they ask me every single year. I usually get help all the time. Hey, what changes? Are you changing the interest rate on private lending? Are you changing the interest rate on private lending? No, we're not changing the interest rate on private lending. That's not what I'm here to talk to you about. But what we are doing is we're making some improvements to the private lending program to increase the efficiency and to decrease the workload that goes into doing all of these private lending placements for you. One thing we've realized over the past 3, 4, 5 years, the amount of capital that we have raised has increased significantly. We are building 390 homes this year, in addition to doing hundreds of renovations. And so that capital that we're raising, we're so thankful and appreciative that you all are lending that capital, but it is a haul to kind of put this jigsaw puzzle together. Mm-hmm. And so what we're doing is we are raising the minimums on our private lending program. So the minimum investment for first position for private lending is now $200,000. So I'm gonna let that sit for a second because that sounds kind of like a large number, right, Pablo?
Large number, man.
Okay.
That's a big number.
That is a significant increase. Prior to this, it was 50,000 or 100,000, depending on the position that you were in. So this is a significant move up to $200,000. The reason that we're doing that is because build costs have come up so much. And so to be in first position, you need to be able to basically support the cost of an average build completely.
Mm.
By doing this, this allows us to limit the amount of jigsaw puzzling we have to do to put multiple lenders together on one build. So for first position for private lending, the minimum now is $200,000.
Okay. What about second position, Shixi?
So I'm glad you asked about second position. For those who are private lenders, there's a smaller percentage of people who have come to private lending have lent 200,000 or more, right? A much higher percentage of people, especially starting out with us, have lent a smaller dollar amount. And we did not want you to think that you were being left out in the cold here. For private lending for second position, the minimum is still $20,000.
Okay.
So you still have an opportunity to lend to JWB. Of course, we have to have a pre-existing relationship with you. We do not market this, and the vast majority of folks here are current clients, or have a relationship with us. So it's important that we have that pre-existing relationship with you. But this is something you can do as a non-accredited investor and lend as little as $20,000. But the key here is understanding why second position works for you. That might be a difference that you might not have heard before.
Mm-hmm.
So I thought we should spend a little bit of time doing that.
Well, before we go there, GC, we got a couple of new folks, right? We got Con, we got Elizabeth here. They came here for the property of the week.
Mm-hmm.
Why don't we just let them know what private lending is, the difference real quick. I know it's not easy for you to speak in short sentences,
I'm
but
getting better.
You are. The difference between private lending and turnkey rental property investment.
Yeah. So private lending, you are the bank to a developer like a JWB. So private lending is the reason that JWB can go and actually build 390 homes. JWB doesn't go to Bank of America and have a line of credit with Bank of America to build these homes, because Bank of America doesn't offer products on land that would work for our business model.
Mm-hmm.
And so the reason you have an opportunity to lend private money and earn a great risk-adjusted return on investment is because you're operating in this little niche where banks don't lend, but there are outfits like we are that have a significant need for capital, and the ability to turn this capital quickly and efficiently for us is a big opportunity, so that we can build 390 homes and sell 400 homes a year and all of that good stuff. So in essence, you're the bank. And in many ways, the protection that a bank receives when they are making a loan to you as a borrower, those are the same protections you're going to receive as a lender to JWB.
Got it. Cool, man. So at the end of the day, this is more of a cash flowing, it's an income producing tool, right? It's like a bond or a debt instrument, right?
It is very much like a bond. It is a debt instrument. So there's a specific interest rate that you earn,
mm-hmm.
and you don't have to worry about things like maintenance cost or vacancy cost. So it is even more set it and forget it than owning a turnkey rental property. The interest rate that we pay is a 10% interest rate. And so there again, it's an opportunity to earn a much better risk-adjusted return than is typically out there for a bond. And the security that you have with this investment actually is better than what a typical bond would give you as well.
Yeah, got it, man. This is, if you follow the show, this, right? This was how I started doing business with JWB back in 2014. I had about 50 grand somewhere. I put it in that private lending program here, paid me out in a little bit over a year. I know it's a 3-year note, but
mm-hmm.
you guys tend to underpromise and overdeliver,
mm-hmm.
right? So it pays out very steady cash flow, no kind of no variability to the idea of just rental properties that you might have a month where you have some extra expenses. Rental properties long-term, higher rate of return,
mm-hmm.
and an appreciating asset. This is more of a set it and forget it. You have first position and second position. I remember when it was explained to me, I was a second position guy.
Mm-hmm.
When it was explained to me, it seemed like a pretty similar risk, but maybe you can talk through it.
Yeah, well, let's talk about what first position means and what second position means. So when you are making a loan, that is secured by the property, and then you go into position on the public record based on a number of factors. And it might be the time that you made the loan. It might be the size of the loan, but you basically have positions. And this does not mean that you are investing with somebody, right? If you are in first position, you are not investing with the second position lender. And in the event of a default, the first position lender would get paid back first. The second position lender would get paid back second, so on and so forth for third positions if they're worth them. So it is about, in the event of a default, who would get paid back first. That's what first, second position is.
Yeah, but how often does that happen, right? Has that ever?
Never. In 17 years of running this company, we have paid 100% of our borrowers back, principal and interest. We have borrowed over $300 million through private lending, much of that through second position private lending. And we have had a 100% track record of paying everybody back with principal and interest. And we survived the Great Recession doing that.
Yeah, you guys started doing this in
survived the
2006,
pandemic.
right? Yeah.
It's like, what else can they throw at this private lending program that we haven't seen before?
Cool, man. So great update. I was just kind of telling you that I didn't want to jinx it, but I found an old 401k for my last company that I had no idea was still there. I found like an extra 60 grand. I was like, definitely going to put it in private lending. Sounds like a second position.
That's amazing.
Yeah.
I hear that quite often from folks as, you change companies and you lose track of it. I would love to hear in the chat if anybody else has found a lost 401k or an IRA they weren't thinking about and had that experience, because I'm sure it was a good day for you.
Yeah, it was a good day. Like, it was one of those things where, like, I got it it was when I lived in Miami. So they mailed it to my parents' house.
Mhm.
And my mom's like, do I throw this away for you? Like, she calls me for every piece of mail that's like junk mail. And I'm like, throw it away. No,
not that one.
So anyways, that worked out nicely. Jillian Noel asked the interest rate on it. It's 10%. You said, I just wanted to call it out.
Mhm.
Eddie Harris says, what is the minimum for private lending? So Eddie, first position is 200,000.
Very good.
Second position is 25,000.
20,000. $20,000 as a minimum for second position.
Cool. Stevie B in the house says 10% paid at the end of year 3 term or annually?
Great question. So it is paid annually.
Okay. So that means that every year you get 10%.
Exactly.
Right. Okay, cool. Mountain Man Billy Green says, is the first position lender responsible to pay the second lien position lender after they enforce and collect from the default/foreclosure?
No, the first position lender has no responsibility to pay the second position lender.
All right. And Lee MVP Bishop says, does each position get a portion of the deed?
Yes, I'm glad you asked about the security on it, because I do want people to understand why this beats a typical bond, right? In a typical bond, right? It's a debt instrument, but you don't have a piece of security of that company or the property that company resides in. What you're investing in here has many levels of security that you just don't get in other assets. So specifically, when you make a loan, this is first position or second position, what you're doing is you're actually getting a mortgage and a note for that loan. So think about this. If you're a homeowner and you borrowed money to purchase your home, Bank of America or whatever big name bank had you sign a mortgage and a note. And in the event that for some reason you didn't pay, that mortgage and that note gave the bank the opportunity to take your asset from you, take your house from you if you didn't pay.
Mm-hmm.
Well, that's the same thing that goes on in JWB private lending, except the roles are reversed. You have a mortgage and a note, and this protects your interest in the unlikely event of a default. Again, has never happened in JWB history. But if that would happen, you would be protected. You, in essence, would be able to recoup your initial investment and be able to do that through the court system. It would be through a foreclosure, which nobody wants. But the point here is that you have this in your back pocket, whereas if you invest in the stock market or you invest in bonds, you don't. And so that process plays out again for first position or second position. And so a question I think many people would say is, well, in addition to having maybe a lower dollar amount and going to second position, why else would I invest in second position? And I want to let people know that there are a lot of similarities between first and second position. Like if you had the choice and you have the dollars to do it, sure, go in first, right? Mm-hmm. But don't feel bad about going into second position, because when it comes to protecting your investment, loan to value is incredibly important. So whether it is first position or second position, we are going to have a maximum of 80% loan to value. Just really simple numbers here. Let's say that it's $200,000 that is required for the capital on a certain house. Mm-hmm. And let's say that the value of that house is $200,000. Mm-hmm. 80% of that is $160,000. So we won't ask you to lend more than $160,000 on that property. That puts you in a position of strength, even in the event of an unlikely situation like a default, which again has never happened. So that spread there is one of the things that protects you. There's other things that protect you for second position too, and first position, just to kind of rattle them off here. Some of the things that you should be looking for if you're thinking about doing a private lending investment, see where the money's being held. There are a lot of real estate developers, or especially smaller turnkey operations that actually will take your private lending and put it in their company bank account, which if you're doing a significant amount of volume could create a lot of problems. So everything we do is held by our title company, held in individual escrow accounts to make sure that the accounting is easy, that there's an arm's length transaction here. It is not in the JWB bank account, which is important. And then lastly, you want to make sure that there's adequate title insurance whenever you're doing a private lending investment to make sure that there's no defects on the title from before. We've got all that squared away as well. So first position, second position, you're in a good spot. Judging on track record, there's really not much of a difference.
All right, man. Sounds good. Well, we are almost 25 minutes
Holy
in.
cow, it's 25 minutes.
I know.
Wow.
I know. We went long with a roll call. Anyways, I'm not going to belabor everything. We got one more announcement. I'm going to tease it in a second. But first, we got new folks here. They came to see the property of the week. We're going to magically whisk ourselves away here to 683 Linwood Avenue, Jacksonville, Florida, 32206. You can see it on the screen here. It is a existing remodeled home at a purchase price of $180,000, monthly rent of $1,200, 4-bedroom, 1-bathroom, 1,210 square feet. Construction status finished, so it's been remodeled. Average duration of resident stay of 4.5 years, right? Like what we were just shooting the class talking about the importance of length of stay for a resident and how most property managers don't do that, 4.5 years. A best-in-class 4.6% annual appreciation rate for a cash-flowing market. That's what Jacksonville represents. And really what us not average investors look at is this IRR here, right? We're not buying any of all this stuff. What we're buying is this number here of 14.78% IRR, which is, of course, bolstered nicely by this $10,000 buyer incentive that is still around for JWB. But GC, I just got one question when I look at this. What do you love about this property?
I thought you'd never ask. I mean, there's so much to love here. How am I supposed to choose something here? You know what? I'll do it. I'll tell you what I love. I was tempted to say that I love the IRRs. We're getting dangerously close to 15%. Right? This is an opportunity to earn 15% on your money each and every year.
If you're listening on Tuesday, that is better than owning the Philadelphia Eagles for Jeff Lurie.
How about that? You want to be a better investor than an NFL owner billionaire? Here's your opportunity. But that's not what I'm going to choose. I'm going to kind of cave a little bit. You know, I talk about not looking at purchase price because you need to be looking at IRR. And a lot of folks are like, can we see a low price property? So I'm going to cave a little bit. I'm going to go a little bit outside the norm here. It's still about IRR, but let's shine a light on this low purchase price a little bit.
It's a big deal, man. I haven't seen anything under like 215 in a really long time.
So the way that you get there is you invest in a renovated property. Yeah. Right. That's really the only way to call it sub $200,000. Yeah. And they don't come around very often because inventory is still very scarce. So this is a great opportunity, especially if you're somebody who has a little bit tighter budget, right? Like, you want to make sure that you have adequate reserves in there. And maybe that's keeping you away from buying a property right now. This might be a great way to get into your first JWB asset. Still make sure that you have the necessary reserves to make sure this is going to be a good experience for you and get on your path to rental property investing right here.
Yeah, I think of somebody that's like maybe buying it inside their retirement portfolio. So you got to have it all like in one place. Yeah. And maybe needed that lower price. This is a really, really good opportunity to hit that thing up.
Or if you are on the doorstep, you want to get to 3 properties in your portfolio, about how that increases consistency throughout the portfolio. Might be a low priced asset. You can get in, call it for, $50,000 or $60,000 out of pocket and maybe increase your consistency of your overall portfolio.
50 or 60. I'm wondering if I can cash out that IRA. All right. I'm not going to just think about myself. I want to think about the audience here. I just want to say something that when you asked that question of who's got a found money scenario. Yeah. Marilyn Cotterman found an old stock certificate worth $16,000 not that long ago.
That's amazing. Congratulations.
It's the best.
Every time I ask people like, that happened to me. So if you haven't looked, take some moment in thought and think about the last job you left and see if you got that IRA there.
Man, I remember I used to do intramurals at University of Florida. Like I used to be like a referee for flag football.
Gotcha.
And there was like I remember there was like a 1 hour that they still owed me that I kept on getting like mail about that I at some point just started ignoring. I'm like, what that's worth, right?
Yeah.
Like $6 from 1999 might be $12. I don't know.
Pick me up. You want a real pick me up and give you a smile on your face. Think about that for an old 401k. Those numbers are typically Larger than that number.
Okay, tell me I just found one, but
There you go.
all right. Raj Batu says, I lend money to JWB private lending on multiple deals. Awesome, Raj. Right along, Raj, man. GC, you know what I would love to talk about, right? So the community may or may not know this, but we're like filming this class to give people the 101 on like rental property investing. And we were shooting it earlier, right? And we were just talking about this right here, the average duration of residence stay. We spent a lot of time on there, specifically when I messed up recording the first 2 times.
Yes, that happened.
That definitely happened. But 4.5 years average duration of residence stay. Can you just were hitting that speaking point so tightly of like how important vacancy rate is for the life of an investment. You want to kind of just like wax poetic on that a second?
Yeah, absolutely. I think it all starts with the alignment of goals. When you're thinking about where you're putting your money, you need to follow the money where those teammates are making money. And, typically that's where you're going to see their pattern of behavior. And so when you align yourself with an organization that is making more money when you are making more money, it increases your chance of, hitting your return on investment. And so with that big high overarching theme now, let's drill in a little bit. Why does JWB try so hard to keep your residents happy and in your home for so long? Well, the reason is because there is a correlation between how long your resident stays and your return on investment. And when we bring you on as a client, we sit down, we don't just sell you a house. We sit down and we say, how many houses is it going to be required to hit your goals over the next 3 years, over the next 5 years? And the reason that we do that is because we want to overperform for your goals so that you come back and you buy your 3rd house, your 5th house, your 10th house with us. So one way to make sure that we are going to hit your return on investment goals is to consistently drive that average duration of resident stay number. Because when that number goes longer, when it gets bigger, you save money on vacancy cost, you save money on maintenance cost, and you save money on fees, tenant placement fees that you don't have to pay JWB. And so it can be this beautiful experience where you win because you have a longer resident stay, which leads to a better return on investment. And then, of course, your resident is winning because they're signing up to stay there for a reason, because they're enjoying it. And then JWB can win overall as we continue to sell more houses and make more clients happy.
Yeah, the part that we were shooting was this like cash flow killers kind of like shooting of it. And we were talking about the expenses, like the revenue versus expenses, right? Revenue is pretty straightforward. It's rent collected. Expenses is the fixed expenses and the variable expenses. Those fixed expenses, easy to predict.
Right.
Variable expenses, this idea that's like, man, if your operator isn't great, then you can't really predict them. And you need an operator that is not just like, first of all, has enough data that can guarantee that those numbers on that spreadsheet for the next 10 to 15, 20 years are going to come in, right? And the thing that does that, the thing that makes it come in is reducing vacancy, right? Because if people leave, then you got to fix the house, right? Like you gotta, I thought it was interesting how you broke down like I think it was 4 cost centers of vacancy, right? Like it's the tenant improvement, the thing that you got to do. It's the mortgage payment that you got to pay because somebody's not paying it. It's the lost revenue from the lack of rent. And there was one more that I thought was really interesting. Was it?
I only said 3, but if you come up with another one, let me know.
I just feel like, yeah. So it's the mortgage that you pay, it's the lost rent, and it's the extra maintenance that you got to do.
Well, it's the lost rent, which
and the tenant placement fee.
Yeah, I'm sorry. Well, there's really only 3.
No, that's 4.
Okay, that's 4. The mortgage payment is what you pay, but it's really the lost rent is what you're missing out on. So the lost rent, it is painful to make that mortgage payment. So if we want to call that one the 4th, well, you know what? I think you're right. We'll call it 4. Can we go with another one too? Let's go with 5 or 6. There we go.
All right, man. So anyways, man, I thought that was interesting. And then I thought it was really interesting how you described the whole idea of like, when you are dealing with a property management company, you got to see where they make their money, right? Like most property management companies, because they make their money mostly on those variable costs, that includes tenant placement fees and stuff like that. Then, their incentives are this idea of, I don't need to sign a long-term lease. I don't need to do these things because I'm trying to like have a profitable business over here. But when the incentive is to sell you more homes, then they have to guarantee a great experience for you to then keep coming back. That now incentivizes this like long-term thinking perspective that reaches this like 4.5-year thing.
Absolutely. In fact, as you were mentioning that, I'm thinking to myself, I'm going to go back and I'm going to look up JWB's percentage of our overall revenue that comes from tenant placement fees. It is a relatively small percentage, whereas most property management companies earn 25 to 50% of their overall revenue from tenant placement fees, which if you're paying a tenant placement fee, not only you're paying that fee, but you have vacancy cost and maintenance costs that come along. So that's not the correlation that you want. That's not them making more money when you make more money. So I'm going to look that up so that we can kind of like compare that, right? It's going to be a lot lower than 50%. I can tell you that.
Yeah, that makes sense, man. Cool. All right. We got some questions rolling in. Raj Bantu, right along Raj, says, what is the reason for disposition amount increased from 75K to 200K when a typical turnkey property is sold for less than 200K?
Well, Raj, the typical turnkey property is not sold for less than 200K. You know, the average turnkey property probably sells for about 230 to 250 now. And we're doing a lot more new construction now as well, which is a higher purchase price. And man, I was just in our financials meeting yesterday looking at those build costs coming in. It's beefy. It's beefy. You want to talk, you see an expected build budget, and then we can line item out all of the costs. If we go over, we know why. And it's just not fun looking at overages and it just says lumber surcharge, electrical surcharge, well, septic surcharge. Like there's a surcharge on surcharges, you know? And so build costs have gone up dramatically, and the typical sales price for your turnkey properties are higher. And that's the difference.
There you go. All right. Lee MVP Bishop has a question. Greg, is this a new JWB property that was acquired from another property management company acquisition?
No, I think this is one that we just bought and then we just renovated. I didn't specifically look into it, but no, I think this is one that we just bought our normal channels and then, renovated it and just made it for sale.
You want to talk through why he's asking that? Like, you guys acquire property management companies and that's how you build your business?
We do. The way to make sure that we are going to be able to thrive in whatever market cycle comes to us in the real estate space, a big strategy there is to make sure that we have solid, repeatable sources of income. And one thing we know after doing this for 17 years is sometimes home sales are on fire and sometimes a little bit harder. Like towards the end of last year, so it was harder to sell houses. But you know what continues to come in over and over and over again? The income from those 5,000 properties that we manage over and over and over again. So if you're thinking about how to ensure that we are here and we are thriving and that our team is taken care of no matter what market cycle, growth of the property management business is actually very, very important for that. And so we grow the property management internally, organically, by buying properties that we then renovate or build, and then we sell them to you and we continue to do the property management. But we also acquire other property management companies. We've purchased 4 books of business over the last probably, I don't know, maybe 3 years or so. And so that we've been able to do that. And, we're continuing to look for those property management companies that would be the right fit for us to acquire. And so, but I don't think that this home came from one. I think, we do have examples where clients who we picked up through other property management company acquisitions, like they're not turnkey clients, but they are property management clients for us. They find out about the turnkey operation. They actually become turnkey clients. Which has been a nice little bonus that we didn't plan when we acquired it. But no, I'm pretty sure this is just one that we just picked up through our normal channels.
There you go. All right. Lee's got another question. That's why they call him the MVP. He's coming hard, right? He's like, John Henning, hold my beer.
That's right.
Greg, also, is the mortgage rate at 5.5% due to the JWB incentive package to buy down the interest rate?
Yes, great question. So the interest rate on the evaluations, you'll see if you go to JWB inventory and download the property evaluation, you'll see it's 5.5%. That's down from where it was certainly 3 months ago, 6 months ago. A combination of that. Part of that is just that rates have come down, which is nice for all of us. In addition to that incentive that we have, that $10,000 incentive package that we offer, a portion of that is used to buy down your rate for you to get you down to that 5.5% interest rate. So combination.
All right, there you go. We got an attendee from France. Anonymous attendee is asking, is it possible to lend money for a fixed period, 1 year, 2 year, etc.?
Oui. So great question. This is a standardized program to make it easy for everybody. And so the term is a 3-year term. So that's you saying, okay, my money is locked up with JWB for 3 years and we make annual payments to you. Now, I will tell you, if life happens and you need to get your money back for a certain period, for a certain reason, if you give us at least 6 months heads up, we're going to do our very best to return that money back to you. And we've been successful to be able to do that for clients where something has come up out of the ordinary, but we do need a heads up there. But you should just plan for your money to be there for 3 years.
Plan for money to be there for 3 years. You guys generally under promise, over deliver on that stuff. It's generally shorter than that, right? Like
Yours was
for me was like 1 point something, like 1.1, 1.2.
Yeah. The average duration of a loan is actually much less than 3 years, to your point.
But you're not going to go promise it because you like to under promise, over deliver.
There you go.
C'est magnifique.
Well done.
All right. All right. Lee MVP Bishop, more questions. Greg, can you go over the typical price that JWB puts into a renovation to bring it up to JWB standards?
Yeah, I was just in the financials meeting yesterday and looking at the renovations. You see $40,000 renovation, you see $50,000 renovation. And these are homes that are 1,200 square feet, 1,400 square feet, 1,600 square feet. So, the average renovation cost is somewhere around $42,000 that we put into each renovation that we do.
All right, there you go. What does that you normally come with? GC. I remember us just talking about that on the class that I didn't record.
What do I do?
Like, what do you, when the renovation?
So where does that go to?
Yeah.
You want to make sure that you do not have any deferred maintenance when you buy a rental property. Deferred maintenance would be like, you buy a property and the person who sold it to you said, oh, you know what? The roof's good. It's good. But you're looking at it and you're like, I don't know. Or the AC is 15 years old, but still running. You don't want to buy a rental property like that. So we have standards in place to make sure that there is no deferred maintenance for you. You want to make sure your major mechanicals are up to that standard along with everything else. But those are the biggest potential costs that come along. So major mechanicals would be your roof, your HVAC, your heating and air, your electrical, your plumbing. And so those are the things to make sure that, are up to that standard. And that's how you protect yourself from unexpected surprise right out of the gates.
Unexpected surprise. And the other thing that I remember from the class that we were just doing that I thought was interesting was this idea of high quality materials for rental property investors. And the high quality meaning you want to put in there high durability, low maintenance, easy to replace finishes.
Exactly.
Which I thought was real cool.
Yep.
All right. Well, we got Mountain Man Billy Green asking a question here. When purchasing land or a lot for a new build, what is the most you would buy it for if the ARV on that build is 250 grand? Is there a formula you use?
We many years ago had a formula, but now we have so much accurate data that we're able to pinpoint exactly what we should be spending on a lot purchase. And, it's based on the costs that come along with it, the purchase price, the renovation or the new build that we have coming in place. So it's not bad to have a formula out there. Like, for example, the one that you'll learn if you're a newer investor is 70% minus repairs, right? And, so that's where we started. But because we have so much data, it's much more specific than that. I don't know specifically what we would do on I think it was like a $250,000 purchase. I mean, I can tell you that our lot acquisition costs have come up significantly over the years. I mean, it's not surprising for us to spend 50 grand or 75 grand on a lot that might have been 10 or 20, a number of years ago. So yeah, those costs have come up just like everything else.
Sounds like an interesting show to do.
Yeah, we can do that.
Yeah. All right. Lee MVP Bishop is saying number now is 65% minus rehab.
Yeah.
All right. We got Michael Santorios in the house. Michael, welcome back. Greg, I can attest to what you're saying. Currently have 12 properties. One of them I picked up in 2017 had a 3-year rental. They renewed for 3 years in 2020. Shannon Baker, touchdown maker, just let me know they signed again for 3 more years. So I'm good till 2026 with a rent increase.
That's awesome.
That's awesome, dude.
Michael, thank you so much for sharing that. It's really cool for you to be able to share a real world experience and not just the theory that we're talking about on the show. I mean, that's 6 years on the way to 9 years.
That's a big deal
of consistent rental income coming in. So super happy for you.
Cool. Buddy. Patriarch of the first family, Ken Mullane, is asking, does the renovation include upgrading hurricane restraints to bring the structure up to code?
I don't want to speak out of turn. I haven't looked into the hurricane restraints thing. So let me get back to you on that one. Actual construction on the homes, not exactly my thing, but I'm always one phone call away. So let me ask that and I'll get back to you next week.
Cool. We'll get back to you next week on that. GC, we're out of questions. I know that we're a little sneak peek, y'all. We're going to go check out the site for the tour next week, which breaking news, GC, break some more news for us today, would you?
Well, good news is that we've really just been blown away by you guys signing up for the tour, flying in from all over the country. When Pablo and myself and Madison and Kate put the idea together for this tour, we said it's really paramount that we have this experience together, that we are not fractured, that we do not have as many people as we could possibly get, which would keep us on multiple buses and all of that. We really wanted this to be just an awesome experience. And so on the positive side, you guys have blown us away by signing up and you're all ready to go. On the negative side, we got to cut it off.
We're at capacity.
We're at capacity.
We're at capacity.
So it's going to be great. We're going to have a waiting list. If you want to continue to sign up, we can put you on the waiting list. Of course, there'll be first come, first serve. There might be something that happens, and if somebody can't make it, we'll go first come, first serve on the waiting list. But yeah, this is such a win for the show, for the community, for you all out there. I couldn't be more excited for what we're going to put on Thursday. On Saturday. I'm
super pumped. We're at right around 50 people, which was the capacity for the bus that we could keep. Couldn't get any more. The part of me that loves being together with everybody is super, super pumped. The part of me that likes the bigger, the better is like, oh man, we sold out, but the marketer in me loves scarcity and loves that we sold this out. So next time we do this, you're like, all right, I'm just going to come.
We really did sell out. I didn't know we were going to, but we really did. That's a pretty cool win for us all.
Yeah, really looking forward to it. On the 25th, we are meeting in downtown, little real estate education in the morning from me and GC. We've been practicing hard. The investor panel, where some of the kings and queens of our community will just be up there and just share lessons and whatever you want to ask him. It's going to be great. We're going to do a live Not Your Average Investor Property of the Week show at 2 properties. Come back, a little bit of lunch, walking tour to see all the amazing things that are happening in downtown.
It's going to be a day.
It's going to be a day, man. And then a little happy hour.
There
we're going to win a little pop.
There we go. Need to relax after a big day like that.
Yeah. So super, super pumped to see everybody in just over a week. I'm really, really excited for this. Next week on the show, Tuesday, we're going to talk about turnkey versus vertical integration 2023 update, right?
Love it.
We always say that word, vertical integration, around here, flying it around. GC's got some data that shows the value of it all. We've got some lessons learned since we've been floating that around. We love hearing you use that term, right? That's the ultimate kind of thing that gets us to, make us understand that you understand, is that you use that terminology. So we're going to update the playbook on vertical integration and what it means to investors. And man, I'm just super pumped that we had 45 people here just hanging out. Love the new names coming here. Con, Elizabeth, good to have you. Hope you stick around. Anybody that hasn't checked in, check in, because we love to say your names. I did see that Erin O'Neill checked in.
Into the light.
Erin O'Neill. She's coming in a week or so. So pumped to see you, GC. I'll give you last words.
Just a really fulfilling day. It started even before the show, meeting our wonderful clients here and knowing how closely related they are to this experience that we get to do on the show, and seeing them invest for their beautiful 3 kids there, to just segue into this just amazing experience with you all. So thank you guys. Again, if you can find it in your heart to help us on our mission of raising money to donate a brand new home to a warrior, we would love for your support. You can go to jwbrealestate.com/raffle. And for those who are already signed, seal, and deliver on the tour, cannot wait to see you next week. It's going to be awesome.
I can't wait to see you next week, because it's definitely not going to be average.